There is some news, but we've got a corporate waiting by Shriram Finance. Now, Shriram Finance was up 2% on Friday. It rallied 24% in June, even as very large blocks from Piramal Enterprises TPG, which totaled more than 10%, got absorbed by the market. This morning, Morgan Stanley has further raised the target price on Shriram Finance to 2,200 rupees, which means from the current levels of 1735, we're looking at an upside of more than 25%, and they say the stock supply was well absorbed, contrary to fears. Separately, the company has also tied up with Paytm to boost their digital loan distribution business. This tie-up is aimed to tap the potential underbanked segment. Umesh Revankar, the Executive Vice Chairman at Shriram Finance, is here with us on the show now. Thank you very much, sir, for joining in. This is Reema here. First, if you could give us an overview of the demand on the ground, particularly in terms of CV financing. Tata Motors reported their June monthly sales numbers. The CV monthly sales are down 8%. How is demand on the ground? And if you could give us some numbers. I think your guidance is for a 10% growth for this year. But could you beat it, do better? Just some colors and number.
Yeah, good morning. See, what we see in CV is last year the growth was, especially in heavy commercial vehicle, the growth was above 40% year on year. This year, it is not grown year on year, but still there is a small growth of around 5 to 7% for the full quarter. And I believe post the monsoon, the demand will pick up because the construction activity normally picks up post the monsoon after September. So the major demand that is coming for CV is because of the huge infrastructure projects and the government spend. So that will be reflected in the second half of the year. Overall, I believe there will be a double-digit growth for the commercial vehicle. By and large, the demand is good. The vehicle prices have gone up a little bit because of the implementation of the Bharat Stage 6 to 2.0. And therefore, people have postponed buying the vehicle a bit. So I think that is the reason. But post the second half of the year, the demand should come back if the everything goes well, like having good monsoon, infrastructure being good. I think the demand will be back. So I think the resale values have improved significantly because of the price going up in the new vehicle. More demand has come for used vehicle. So I feel the demand is good and we should be able to grow double digit very comfortably in CV financing.
All right. Hi, good morning, Mr. Revankar. This Morgan Stanley note that we're talking about, they're estimating that your AUM grows by around 15% for the next 3 years. That is still FY26. And also, they are plugging in a NIMS number of around 9.7%. You're on board for both these two numbers? Very gettable?
Given the guidance of 15% in the last year while announcing the merger, and we are standing by it. And I believe the demand and scope for the credit is very good. Especially, we are also expanding our business loan franchise, which was mostly in the south before the merger of Shriram City, and now across the country. So we are going to grow a little faster in the SME lending. Plus, of course, the small business loan also we want to extend across the country. So there will be a growth, 15% growth. And since the small ticket loans comes with higher margins, higher lending rates, we should be able to maintain good net interest margins.
Of around 9.5 to 10%, gettable?
I can't comment on that now because right now our net interest margins are hovering between 8.3 to 8.5. But the calculation varies from the analyst to analyst. It could be we have to see what they have calculated.
And it will depend on the mix as well. Mr. Revankar, so we just wanted to get the broad numbers out of the way. But the recent news has been the tie-up with Paytm. Tell us, as a percentage of your total customer base, how many of them are digital linked? If you could break that up for us, because we want to understand how big the opportunity is in terms of this tie-up.
See, I can give broad numbers. Initially, we had 80% of our customer paying in cash. Today, the only 20-25% of them pay in cash. Around 80-85% have migrated to digital or the banking mode. That is the kind of shift we have in the last 7-8 years. So I believe there are so many events that triggered it, that demonetization plus the COVID, that triggered many of them to move on to a digital platform. And we also were every time we were there when the turn happened, and we had all products ready for a digital transition. So this again, we are taking it further up by tying up with Paytm.
Got that. Mr. Revankar, just to go back to the basic fundamental issue, right, which is the cost of commercial vehicles. There was another news report recently where I think Mr. Gadkari was talking about having the driver sort of part of the truck having air conditioning, and how that will increase the cost of trucks, etc. I mean, we've heard it from other CV financiers as well that is perhaps the single biggest sort of in a way impediment to growth. Would you agree with it? And do you think incomes are rising fast enough to support the growth, or you think it'll be a challenge?
No, I really don't agree with this view, because what we have to understand is providing an air condition. Most of the large trucks today, all of them have an air-conditioned cabin. It is not that they don't have. So the only thing is the smaller truck like LCVs may not have the air conditioning. So maybe Gadkari is talking about long-haul trucks only. So most of them have the provisioning of air conditioning. Maybe it will cost around 30,000-40,000 rupees more per unit. I don't really think it will be expensive. So I see one thing, what most important thing is there will be less driver fatigue, and he will be able to drive more. So his productivity will go up. If the productivity goes up by 15-20% of each of the operator, then definitely what you bring on the table is much higher. Your revenue per vehicle per day will increase by 15-20%, and that's substantially enough to recover the additional cost. I don't see that is an impediment. It is actually a good, and it will help the road transport industry much better.
Oh, that's an interesting point. We've not heard yet. So thanks for bringing that to light, that the efficiency perhaps will offset the rise in cost as you see it. But we'll see how it goes. So thank you very much for joining us, Mr. Revankar. Appreciate your time here on CNBC-TV18. Thanks very much for being here. We'll take a very quick commercial break here. We are back with more. There's just 13 minutes to go for the pre-open session. Anuj is here with how he's seeing things. A little later after that, we'll have our technical experts, and we get you the top stocks to watch for the day as well. Stay tuned.